All right, welcome back to the Explainer. Today, we're diving deep into a really interesting one, Mazagon Dock Shipbuilders, or as you probably know it, MAZDOCK.
So, to get us started, let's frame this whole discussion around one single massive question. Is this company actually India's most powerful defense monopoly?
Well, the answer really kicks off with this one incredible fact. And honestly, this is the bedrock of their whole business. MAZDOCK is literally the only company in India that can build both advanced destroyers and submarines. Think about that for a second. That unique capability, that's their strategic superpower. Okay, so let's get right into it. We're going to start with the good stuff, the bull case. What are the most powerful arguments for this company? First off, you just have to appreciate the history here. I mean, we're not talking about some new kid on the block. This company has been around since 1774. That's over 2.5 centuries of know-how, making it a true strategic national asset. And wow, just look at these numbers. This table just perfectly lays out the company's financial turnaround recently. Just look at that 5-year trend. Revenue more than doubled. Profit grew by 5 times. And maybe most importantly, their operating profit margin, that shot up from a pretty slim 5% to a super healthy 18%. Now this is what really gets interesting. Check out this number, 43%. That's their return on capital employed. A number this high, that's just exceptional. It basically means for every single rupee the company puts into its business, it's creating a massive amount of value. Super efficient. So all of this strength and history leads us to the big one, the single biggest catalyst for the company's future. It's a huge contract called P75I for building next-gen submarines. And the analysis is crystal clear on this. It's not a matter of if this thing gets signed, it's just a matter of when. And the sheer scale of this deal is just mind-boggling. We're talking up to 99,000 crore rupees. Let that sink in. This one single contract could quadruple their entire current order book. It's an absolute game changer. Okay, but let's not get ahead of ourselves. We've got to look at the other side of the coin. No investment case is complete without understanding the risks, right? So let's dive into the bear case. And here it is, the number one concern for anyone skeptical about the stock. As MAZDOCK finishes up its current big projects, its order book has actually shrunk by 32% year over year. So without that massive P75 win, you can see why this trend starts to raise some eyebrows about where future revenue is going to come from. You know, what's also really fascinating is this split we're seeing among the big money players. Domestic institutions, the DIIs, they're clearly buying in, bumping up their stake in a big way. But at the exact same time, foreign institutions have been selling off their shares, a real tug of war. And it's not just about the order book. There are a few other key risks investors have their eyes on. The stock's valuation is, well, pretty high. Margins can swing wildly in this kind of project-based business. The government has also been slowly selling off some of its stake. And, of course, there's that potential gap in revenue before P75I would even start to contribute. So, where does that leave us? When you take the bull case and the bear case and smash them together, what's the big takeaway? It really all boils down to one central point. Okay, but hold on. Before we get to the verdict, we have to do the responsible thing. This is super important. Please remember, this is all for educational and informational purposes only. It is not financial advice. All investing has risks, so please do your own homework and talk to a professional advisor. All right, with that very important disclaimer out of the way, let's look at how the analysis takes all this information, the good and the bad, and maps out a few potential futures for the stock. The report basically lays out 3 different ways this could play out. And look, you can see they are all tied directly to that one giant submarine contract, P75I. If it gets seriously delayed, that's the bear case. If it gets signed on a reasonable timeline, that's your base case. And if they get P75I plus other orders, well, that's the dream scenario, the bull case. And this quote from the source material just hits the nail on the head. It perfectly sums up the whole story right now. At its current price, the stock is essentially a binary bet on the P75I contract. It's almost that simple. All right, let's wrap this up. If you're going to remember just one thing from this whole deep dive, what should it be? Let's get to the final takeaway. Okay, here it is in a nutshell. MAZDOCK is a rock-solid company financially with a competitive moat you could sail a battleship through. But, and this is a huge but,
Its next big growth spurt is almost completely dependent on winning that one massive submarine contract. That's the whole story, the opportunity and the risk all in one.
Now, if you want to dig into all the details we talked about today and a whole lot more, the full report is linked for you right down in the description. And hey, if you liked this deep dive, do me a favor and hit that like button and subscribe so you don't miss the next one.
But most importantly, I want to hear from you. What stock should I break down next? Drop your suggestions in the comments below. And hey, if you liked this analysis, I'm pretty sure you'll also enjoy the reports on Hero MotoCorp and our other stock deep dives. I've put them all in a playlist for you called Stock Specific Analysis. Thanks for tuning in.